When the US government shuts down, it's not just politics, it's people's lives, it's global markets, and it's a wake-up call about how fragile even the most powerful nation systems really are. A shutdown isn't just a headline on the news. It's a ripple effect that spreads across the economy, the financial markets, and yes, even into the pockets of everyday citizens. Point 1, team. What a shutdown really means. When most people hear the term government shutdown, they imagine a temporary pause, like an office closing for a holiday. But the reality is far more serious. A US government shutdown happens when Congress fails to pass the annual spending bills, or even a short-term funding resolution that keep the government operating. Without legal authority to spend money, federal agencies cannot pay their workers, contractors, or even fund basic services. The shutdown isn't symbolic, it's functional. Entire departments are ordered to furlough employees, meaning millions of federal workers are sent home without pay. Others deemed essential, like TSA agents, Border Patrol, or air traffic controllers, are forced to work without paychecks until the funding crisis is resolved. That's not a minor inconvenience. That's millions of families suddenly living with uncertainty. Imagine being told to show up to work every day, keeping airports safe or processing tax returns, not knowing when or if you'll be paid. The ripple effects extend beyond federal workers. Contractors who rely on government projects see payments delayed. Small businesses that depend on federal clients struggle to stay afloat. Permits, applications, approvals, from business licenses to mortgages tied to federal paperwork, get frozen. A family waiting on a loan backed by the FHA, denied. A researcher depending on federal grants, halted. A farmer waiting for USDA assistance, stalled. Even services that many take for granted stop functioning. National parks close, visas and passports are delayed, and agencies responsible for inspecting food, drugs, or transportation face backlogs. For citizens, it's a direct hit to their lives, showing them that the very machinery of government they depend on is fragile. And the cost adds up. The Congressional Budget Office has estimated that even short shutdowns cost the US economy billions of dollars. Productivity is lost when workers are furloughed. Economic confidence drops because businesses and consumers alike become nervous. The longer the shutdown, the greater the damage, not just to balance sheets, to public trust. For UK traders and global traders in general, it's important to understand this reality. A US government shutdown is not Washington drama. You can ignore. It's an event that slows down the world's largest economy. And when the largest economy slows, the entire world feels it. The most dangerous part of a shutdown is that it's entirely avoidable. It's not caused by war, natural disaster, or economic collapse. It's caused by political gridlock. Leaders in Congress fail to agree on a budget, and ordinary people pay the price. That's why it sparks frustration not just in America, but across global markets. Investors and traders ask if the US government can't even keep its doors open. How can it be trusted to lead on global issues like trade, defense, or finance? So when we talk about a government shutdown, don't think of it as a temporary pause. Think of it as pulling the plug on the engine of a superpower. The lights go out in federal offices, paychecks stop, services grind to a halt, and millions of people are left in limbo. That's the reality. When the US government stops, life doesn't stop, but it gets a lot harder for those who depend on it. Point 2, the economic impact. Every day, the US government remains shut down. Billions are lost. That's not exaggeration. It's the cold, hard truth. The US government is the single largest employer, spender, and contractor in the nation. When it stops, the flow of money stops and the economy takes an immediate hit. Think about it, hundreds of thousands of federal workers go without pay. Even if they eventually receive back pay during the shutdown, they cut spending. They buy less, they delay bills, they cancel trips. That loss of consumption ripples out to local businesses, from restaurants near government buildings to landlords depending on rent. Small businesses that supply or contract with the government don't have that luxury of getting it back later. Their lost revenue is permanent. Then there are delayed payments to contractors. The federal government hires thousands of private companies to provide everything from construction to IT services. When the checks stop, those companies slow down or freeze operations. They may lay off workers. They may cut hours. The shock spreads beyond Washington. into every state where those businesses operate. The economic hit isn't just domestic. Investors worldwide watch the shutdown unfold and begin to question US stability. The dollar, often seen as the world's safest currency, can weaken during prolonged shutdowns. That affects trade, Forex markets, and even global commodities priced in dollars. The US Treasury may be forced to shuffle money around to prioritize debt payments, raising fears about default, something that rattles global confidence even further. A shutdown also disrupts data. Federal agencies like the Bureau of Labor Statistics or the Census Bureau release critical reports, jobs data, inflation data, GDP updates that markets depend on. When those reports are delayed, traders and businesses are left flying blind. Without reliable data, decision-making suffers, creating more volatility and uncertainty. And perhaps the most underestimated cost, confidence. Economic systems are built on trust. Trust that workers will be paid, businesses will deliver. Governments will function. A shutdown erodes that trust. Consumers begin to question the economy's stability. Investors start to wonder if America is losing its grip. That loss of confidence has long-term consequences, far beyond the temporary closures of parks or offices. Shutdowns don't just waste money. They weaken faith in the system itself. And faith, once lost, takes much longer to rebuild than budgets. Point 3, that the market shockwaves. Markets are allergic to uncertainty. And nothing screams uncertainty louder than a government unable to keep itself funded. When the US government shuts down, Wall Street doesn't shrug, it trembles. For traders, this is both a danger and an opportunity. Stocks often wobble with sectors dependent on government spending like defense, aerospace, or infrastructure hit hardest. Investors who rely on predictable cash flows suddenly phased out. Contracts are frozen, payments delayed, and growth projections cut. That translates into falling stock prices. In Forex markets, the dollar reacts sharply. Sometimes it weakens because investors lose confidence in US stability. Sometimes it strengthens because global fear pushes traders into dollars as the least bad option. Either way, volatility spikes. GBP/USD, URV/USD, and USD/JPY often see wild swings, creating traps for those who don't understand the bigger picture. Safe havens become the big winners. Gold rallies as investors look for security. The Japanese yen and Swiss franc strengthen as global traders seek stability. Bond markets also see action as treasury yields fluctuate depending on whether investors believe the US will prioritize debt payments. Global markets also feel the pain. London traders wake up to overnight chaos. Asian markets sell off as uncertainty spreads. European banks and exporters tied to US trade worry about delays and disruptions. A shutdown may be American, but its consequences are global. For disciplined traders, shutdowns can provide opportunity. Volatility means movement, but it also means risk. Those who chase headlines often get caught in whipsaws. Those who respect the market psychology, waiting for clarity instead of gambling, are the ones who survive. The truth is simple: when the US government stops, markets panic. Panic is messy, emotional, and violent. But if you understand the mechanics behind it, you can navigate it. If you don't, the market will punish you. Point 4, the human cost. Behind every chart, every headline, every percentage of GDP lost are real people. The human cost of a shutdown is brutal. Imagine being a federal worker living paycheck to paycheck. Suddenly, your income stops. You're told you might get back pay eventually. That doesn't pay your rent today. That doesn't buy groceries today. Families are forced to dip into savings if they have any. Some fall behind on bills. Others take on debt just to survive. Essential workers face an even harsher reality. TSA agents, border patrol, air traffic controllers. They must keep working without pay. They show up every day, keeping the country running while their bank accounts drain. The stress is enormous. Morale collapses. And in critical sectors like aviation or security, low morale can lead to real safety risks. Then there are contractors. Unlike federal employees, many contractors don't get back pay. If their work is paused during the shutdown, that income is simply lost. For small businesses, that loss can be devastating. A restaurant near a federal building suddenly loses its lunch crowd. A daycare that relies on federal employees for clients sees enrollment plummet. The human toll extends beyond workers. Families applying for passports or visas face delays. Farmers waiting for subsidies or loans can't access them. Patients relying on federally funded health programs may see disruptions. The system doesn't just inconvenience people, it fails them. This is why shutdowns cut deeper than budgets. They create stress, uncertainty, and hardship for millions of people. And unlike lost GDP, human stress isn't measured in numbers. It's felt in lives disrupted and futures shaken. Point 5e. The political game shutdowns are rarely about money. They're about power. Congress always has the ability to fund the government. The shutdown occurs because political leaders can't or won't compromise. It becomes a game of chicken. Each side digs in, hoping the other will take the blame. Meanwhile, ordinary citizens pay the price. This political brinkmanship is dangerous. It erodes public trust in leaders. It makes citizens feel like pawns in a power struggle. And it signals to the world that America's political system is more interested in scoring points than serving people. For traders and investors, the political game is critical to watch. Markets don't just respond to the shutdown. They respond to the likelihood of resolution. A quick compromise calms nerves. A prolonged standoff deepens the pain. Political rhetoric, press conferences, tweets, debates can move markets as much as actual policies. The tragedy is that shutdowns are avoidable. They're not natural disasters. They're manufactured crises. Politicians use them to push agendas, knowing full well the damage they cause. This is why they are so destructive, not just economically, but emotionally. Citizens lose faith. Workers lose hope. Traders lose confidence. The political game behind shutdowns reveals a sobering truth: when leaders put ego before country, the people suffer. And while politicians may eventually strike a deal, the scars remain. Point 60, the global message: the US is the world's largest economy and its most influential democracy. When it shuts down, the world takes notice. Allies look at a shutdown and wonder, can America be relied on? If it can't fund itself, how can it lead global alliances, honor trade deals, or enforce sanctions? Rivals look at a shutdown and smile. They see dysfunction as weakness. They use it as evidence that democracy is messy and unreliable. Financial partners, investors, central banks, global corporations start to worry. They hold trillions in US assets. They depend on American stability. A shutdown shakes that confidence. It raises questions about debt reliability, about the dollar's role as the world's reserve currency, and about whether America is losing its edge. For UK traders, this message matters. If confidence in the US wavers, capital flows shift, investors diversify away from the dollar, GBP, EUR, and even smaller currencies may benefit in the short run. But in the long run, instability in America means instability everywhere. The global message of a shutdown is clear. Even the strongest system can stumble when division replaces unity. It reminds the world that economic power alone is not enough. Political responsibility is just as critical for traders, for citizens, for leaders. The lesson is this: when the US government stops, the consequences go far beyond America's borders. It's not just a domestic drama, it's a global warning sign.